Hello everyone, welcome to the Alpha Hustle. Here is a daily review of Nifty and Bank Nifty on how market auction today, what markets failed to do with important references for tomorrow's auction. Let's quickly get started. Let's start with the review of Nifty. After a little pause yesterday, market started one time framing to the downside yet again in today's session. Nifty opened flat where the sellers draw out of the yesterday's range in the A, B and C periods. However, the move lacked momentum in the B and C periods. A quick spike in the E period to probe above the day's high, but sellers knocked the prices down immediately, extending the range to the downside. So this E period spike is likely to be a stop hunt by the smart money to clear off the weak hand sellers from the market. After a bit of rotations and absorbing the demand around the balance low of 14,850, sellers got a spike down, creating a triple distribution balance, clearing the week close at 14,770 and closed at the low point of the day, giving an advantage to the sellers into tomorrow's open. Market eventually is coming out of the 3-week balance, and we could start an imbalance move to the downside. References and scenarios for tomorrow: gap down below today's range will immediately trigger a long liquidation move. With acceptance below today's low, we may head for the probe of the demand or the prior swing zone of 14,500 to 14,600. Context: to turn sideways only if the responsive buyers could step in and push the prices back above 14,850. As long as we stay below 14,850, sellers are likely to control the auction to the downside. On Bank Nifty, finally, the market is moving out of the 12-day balance. After driving the prices out of the yesterday's range in the A period, buyers exhausted in the B and C periods. This triggered the inventory adjustment of weak shorts in the E period towards the initial balance high. This is to remove the weak hand sellers from the market before smart money starts to mark the prices down. Strong hand buyers or sellers just drive the markets unidirectionally. Let's look at what happened during the auction on the 15th of March. The responsive buyers that stepped in absorbed the sellers. However, they did not do a good job to shut off selling. This auction doesn't have any strong buying tail that suggests that the buyers who bought at these exact references towards the low are some weak hand buyers that are to be cleaned out when the auction reverses. On the same day, we had an inventory adjustment of weak shorts where the weak hand sellers have been taken out from the market during the short covering move in the second half of the day. On the subsequent day, we had a nice balance of both long as well as the short inventory into the market with value overlapping higher. However, the way market opened today, there was no follow through to the upside with long inventory being underwater. So these buyers from the 15th and 16th stepped in right near the balance low of 34,650, tried to absorb the sellers, and with sellers getting exhausted, the weak hand sellers covered their positions to create the spike before the strong hand sellers came in to mark the prices lower. So this triggered the spike below balance of 34,650, clearing off the poor lows that was left on the 15th of March by the weak hand buyers and eventually closing the day at the low point of the day. This is how typically the smart money trades. They wouldn't want the weak hand buyers or sellers to trade with them. So the references and scenarios for tomorrow: today's close at the low point of the day gives an advantage to the sellers. Gap down open or acceptance into today's spike will get a follow through for the sellers. Acceptance below today's low is heading for the probe of the gap that was left at 33,600. While context returns sideways only if the responsive buyers could step in and push the prices back above 34,650. One of the questions that I get quite often is, how do I trade? I understand how markets are auctioning and get the underlying context through market profile charts, while my trade entries are all on 5-minute charts. I'll do a separate video on how I look at the 5-minute candlestick charts to get the entries. So how did I trade today? While the longer term context is on the upside, intermediate to short term context is to the downside with a lot of poor trade structures below. So this gave me the confidence to initiate these short positions. So with an open drive in the morning, I was expecting the poor lows on the 15th of March to be cleared. So my first entry was a naked sell on 35,900 call option. However, the trade did not proceed in the way I expected it to be. The blessing in disguise is the spike in the E period back above the initial balance high and into 35,100 zone helped me initiate more short positions. Why did I do that? We had a value developing lower and with one time framing to the downside on the daily time frames and with the broader context on the intermediate charts, we broke down from a 2 week balance. So the spike in the E period helped me to initiate a naked long of 33,800 put option in the current week expiry and a put debit spread of 34,600 and 34,400 for a probe of 34,400, 34,450 zone. Again, market lacked the momentum and there was a slow grinding towards the 14,850 balance low, which is why I've converted my naked long puts to a debit spread. Then comes the spike after the absorption of all the demand by the sellers, clearing off all the weak references below. This is where I started to cover off my positions post 3 p.m. That's all for today. Thank you very much for joining and listening. If you find this content useful, please do like, share, and subscribe. Thank you.